Thanks so much for tuning in to this earnings conversation with the management of BEL. The numbers came out 2 days ago, and I think it's pertinent to try and understand what's the undercurrent of growth, and how will it impact a company not just in quarter 4 but the quarters ahead as well. Mr. Bhanu Prakash Srivastava, he's the CMD of BEL, joins us right now on the show. Mr. Srivastava, great having you. Thanks so much for joining in. How do you characterize the quarter gone by as also the year gone by? Because in some sense, for a lot of people, it was a bit of a landmark year for the businesses that you are involved in.
Till this year, it has gone well, and as on expected lines. If you see Q2, that year-on-year growth, like up to end of the Q3, we have clocked 11,005 crore in turnover, which is 24.4% higher than corresponding figure of last year. Similarly, profit also, EBITDA has gone up by 35.5%. So if you compare first 3 quarters this financial year as compared to last financial year, things are moving ahead in a right way, and we are on track.
You reckon your revenue growth is showing signs of a pickup, and that might continue well through 2023 or FY24 as the case may be?
Yes. See, roughly 15% growth we targeted this year, but our long-term target is to achieve a growth of around 20% plus in coming years. So we are targeting a growth of 20% beyond this financial year, and we are right on the track.
Beyond FY24, you mean, or beyond FY23?
Next year we are targeting 20%. So okay. At the end of the year, we will look into the numbers what we have achieved, and then come up what we in fine terms what we target. But our objective is to ramp it up from 15 to 20% in next financial year, not this year. We stick to our guidance of 15%.
Got it. Well, I reckon looking at the order book and the potential order inflows, it's a matter of whether you are executing enough or no, because I think the orders are there for you to bag them and execute them should you want to reach that 20% mark, right?
Yes. See, as of now, if you see, our order book is around 50,000 crore at the end of the Q3. And what guidance we have given is around 20,000 crore in this financial year. Though, if you see that exactly it is around 3,500 crores we have booked, but around 12,000 crores worth order CNC is already completed. So it's a process in Government of India when really it is signed. So we are targeting end of this financial year, and then another around 4,000 crores we have already submitted the quotation, and then various stages. So 12 plus 4, around 16,000 crore in pipeline, around 4,000 crore we have already clocked in. So roughly we target at this end of this financial year around 20,000 crore order booking, and roughly around, if you see 15% plus, so we will be reaching around 17,500. So we should be closing around 52-53,000 crores order in hand at this end of this financial year. So achieving 20% growth is within reach. Only issue was in last few years was disruption because of COVID, supply chain disruption, semiconductor crisis, which is getting under control. Though I can't say that semiconductor crisis or chip crisis is over. But because we are in a business where our spectrum is very wide, if you see, we are 24 strategic business unit working in diverse technology portfolio. So our diversity is more and quantity is slightly less. So any type of semiconductor, our quantity is not very huge where disruption may impact to a significant level. So risk is spread. So we are able to manage that risk despite the problem in semiconductor supply chain. So we are working, and then we are able to overcome to large extent.
I thought the issues were going down. Are they going down, the semiconductor availability issues?
See, challenges are there. It has improved. Definitely what it was there sometimes back, it has improved. But challenges are still there. But we are able to overcome those challenges.
Yeah, sure. No, that was more from a perspective of whether challenges are there, not just for you, but for the space at large. When I look at the results of some of the global semiconductor companies, they are not showing good at all. So I thought the issues might have gotten resolved. Okay, but good to know, or rather good to understand that there are still challenges there. I'm not saying it's a good scene. It's just that I'm saying that I'm able to understand it better because you're saying this. Now, may I move on, sir, to the operational metrics? Despite gross margins looking okay, the EBITDA margin picture contracted. Now, is this a one-off because of the higher expenses, and do you think normalcy will return, or could this be the how do I say? Could these be the levels that you would probably look to maintain in the quarters to come?
See, if you see that slight contraction is because of our other expenses. If you see our results, other expenses included our travel expenses have gone up because if you compare earlier, because of COVID restriction, very less people were traveling. Now we are aggressive in business development. We are aggressive in trials and evaluation. We have to send the team across the country at various locations, short notice. We have many, what you say, that businesses overseas. So one is that travel expenses has gone up. Second thing is that because of delayed delivery during last 2 years, what we are executing, many of the projects are under LD, liquidity damage, for which we have to make a provision. So that provision has impacted, but we are working with government. We have represented in quite few cases. We got the waiver for LD. So provision withdrawn. We are confident that something more we will get by end of this quarter. So, and over and above that, growth in revenue. So EBITDA, what guidance we have given between 21 to 23, we will be able to maintain, despite some other expenses going up also.
No, you had raised the lower end from 21 to 23 to 22 to 23. So, right, if I'm not wrong, during the Q3 con call, I think.
Yeah, con call, we say that though we are giving a range of 21 to 23, we expect around 22. So that remains. See, target remains to around 22. But that is the range we are sticking to between 21 to 23, because other expenses and all, we are working on those. And then when revenue grows up, these other expenses, they get spread over a larger revenue that base.
Most certainly. Okay. Last couple of questions, sir. One is the nature of the order book currently, and the fact that the order inflow, right, per se. So it's come off for, and maybe it's because of execution, but because you've done 24% revenue growth in the 9 months, but the order book has come off for the third consecutive quarter. Now, why is that the case? Please tell us. Please also tell us about the mix and the nature of the current order book.
See, if you see the defense procurement process, normally it starts somewhere around April, May, June, and then it process goes on. Their plan, we submit the quotations, then technical evaluations, trials and all. Normally it comes to the end of the fourth quarter. Major order booking happens in the fourth quarter, and mostly in the month of the March. So that is what is the order inflow. Every year, if you see that end of 31st March, we book around 14,000-15,000. We have. There may be some dip during peak COVID period, but mostly 14,000, 15,000 crores we have been booking at the end of 31st March. So this year also we are confident that reaching closer to 20,000 mark, the way things are going on and the way PNC has been concluded. There are many emergency procurement orders which services are taking. 300 crores maximum limit, but many which to just replenish there. That also many PNCs have been completed, but materialization will normally happens at the end of the financial year. So that is the way defense business that runs. Apart from that, civilian market also we are working on many leads. Some leads are there in export market also. So at the end of the financial year, when I meet you in the April, you will see the good picture and order inflow also.
That's good. My final question, sir. 9 months, you've done about 24%, if I'm not wrong.
Yeah.
So if you're telling me that you will do 15% for the year, which means that Q4 will be a quarter of degrowth.
Yeah. This is the same question. It is being asked everywhere that the way you grew up, you should exceed this. But you see, defense system is a very complex system. It's not just a 1 plus 1 plus 1, 3. These are all large, complex systems. And when we start planning, we build up the system. They go through various type of testing, trials. The technical challenges are there. Sometimes there's slips, they go overboard. So something you succeed, you do well in Q2, Q3. Sometimes if you previous results, if you see our Q1, Q2 have been really bad in previous years, but we recovered in Q4. Here Q2, Q3 has been really good. So Q4, so you line up the whole product range in that. And what is there, we will do well in Q1 of next financial year also. So it's all large, complex systems which doesn't get supplied in one day or 1 month or 1 quarter. Many of the complex systems we have to work for more than a quarter to realize and recognize the revenue.
Got it, sir.
So if we have done well in Q2, Q3, then Q4, yes, whatever is there, what targets are there, we will be able to meet. And whatever that in the whole process spillover, it will go as a good revenue in Q1. That Q1 will be better.
Got it. If you have 1 more minute, sir, I just want to slip in one more question.
Sure,
Do you have the time? Okay, one last question. There's a lot of talk yesterday about how the defense outlay in the budget wasn't the highest. Now, it may well be the case. I'm just asking you to tell us, how do you think this whole process is moving ahead? Do you believe that the growth could be multi-year in some sense? And what would the implications of maybe a slightly smaller outlay in 1 year be for such a large system?
See, I tell you, sometimes people get by sentiment. If you see that allocation of defense yesterday in budget, total was 5.93 lakhs crores. If you see that capital is 1.62 lakh crores. So which will be for procurement of new items, all new systems. Then there is a non-salary revenue expenditure of around 90,000 crore, which is required for maintaining the assets of the defense forces. It may be procurement of spares, it may be procurement of some systems, subsystems to support, it may be a service order, service business, repair contract, annual maintenance contract. So we have our footprints in both the aspects. One is that new procurement also, and we are supporting defense services in maintaining these assets also. So if our target, if you see that it's a 1.62 plus 90,000 crore, that is total, if you see that area where we will be working. So, and second thing is that as per Government of India policy, even if whatever they have allocated, if something is required for defense, it is never denied. So whether it is there within 1.62 or not, if country requires, government will find ways and means to fund that. And they will move ahead with the procurement of the system. So no procurement in defense will be impacted because of the higher or lower allocation. And these defense projects, they run into years. It's not like today this much allocation has happened, then they will start working on what to procure, what not to procure. They have a yearly procurement plan, 5-year, then 15-year long-term perspective plan. So it is a continuous process of addressing the requirement of defense forces, both in short term and long term. And the whole services, they go on this. So allocation is year in year, and what they do, it doesn't impact the total induction process or maintenance process of defense forces. So we are very confident that what growth aspects we are targeting, around 80% from defense, and whatever we are expanding in many areas. Like I have last time told, we have tied up with Airport Authority for indigenizing the air traffic management system for civilian airports. Now, if you see budget, they have announced 50 new airports are coming. So, and with government's Atmanirbhar policy of promoting indigenous systems in that, BEL has got a very good opportunity in air traffic management system, airport surveillance radar, where we have an expertise and we are working. Similarly, metro, lot of expansions are going to happen. We have tied up with the Delhi Metro. to indigenize all imported system within country. And we have got necessary expertise and knowledge to work on that. And many things, in fact, one revenue line already started operating in our system in Delhi, one line in real revenue in Delhi Metro. So target is that whatever things are getting imported, what expertise Bharat Electronics has got in defense forces, can we leverage that expertise and knowledge in reducing the import in civilian sector? And that also will give a good business opportunity in growth for Bharat Electronics.
Fair call. Thanks, sir, for talking to us today. I really appreciate your time and all the best for the quarters ahead.
Thank you.
The pleasure was ours. Viewers, thanks for tuning in.
Thank you.
Thank you very much.